Welcome back to another episode of Rich Dad Stockcast. I'm your host, Denney, and today we're diving into a topic that's on everyone's mind, recession-proofing your investments. Now, let's face it, whether it's inflation, rising interest rates, or global conflict, the markets are volatile and people are nervous, and rightfully so. But here's the truth. Recessions don't destroy wealth. They reveal who was prepared. And that's why I've brought in one of the best financial educators I know, Rich Dad expert Andy Tanner. Andy is here to help you navigate uncertain times and share real strategies to not only protect your wealth, but actually grow it even in a downturn. And don't forget, before we dive in, head over to stockcastbonus.com for free investing tools and resources to help you make better and smarter moves in any market. That's stockcastbonus.com. Check it out now. All right, let's get into it. Andy, welcome back to the show.
Hey, Del, great topic. I'm excited to dive into this one. You always have the best topics, man.
It's very relevant right now. Now, before we jump into the
Yeah.
topic, though, for our listeners, Andy, tell us what our listeners receive when they go to stockcastbonus.com.
Oh, life changing, for no question about it. If you're listening and you have not been there yet, go there right now. A lot of people don't know where to get started. They don't know how to begin. They want to do something different. They want to be an investor. They'd like to have another income stream in their life. And a lot of people don't know what click and get paid is, and how conservative those strategies can be to have upfront cash no matter what way a stock goes. So there we actually have a ebook right now. It's free, 100% free. I don't throw out the word guarantee. You know, if you buy Apple, I can't guarantee that you're gonna make money with Apple if it go up or down. But I can tell you in this one, I can guarantee you will absolutely read this and say, this is life changing for me. We did a challenge with it in a private Facebook group about 2 weeks ago, and people had their lives changed in 5 days. It was incredible. So if you can download that and read it, there's 6 numbers that'll change your life. And it's really about leveraging those 6 things that you can work on. And it truly is life changing. So we're happy to provide that for free. The other reason I love it is because it takes away excuses. No one can complain when there's, free opportunity of how to get started, get going. And so yeah, go there and download it now. If you have not yet done that, go do it right now. There's no risk to it, only upside. So there you go. Those are no-brainers.
No brainer at all. All right, so let's get into our topic, the recession. Why do most people lose money during recessions, and what are they doing wrong? Let's start there.
Well, yeah, actually, I should be having you do this because you gave a really good explanation about recession when you said there are those that are prepared and those that are not. So I think if you were asking me, and I talked about both groups, if you're prepared for the recession, good for you, and you're probably not as worried. If you're not prepared, 2 things. Number one, look around and see what the people that are prepared look like, so you can say, all right, next time I'm going to be them. And then the second thing is your strategies will be much different if you're not prepared. So we'll talk about both people. Warren Buffett, he has a really good saying. He said, when the tide goes out, that's when you get to see who is swimming naked. And that's a reference to people who are a little bit over levered, and people who are running things a little bit too hot. And so they didn't have what we call a margin of safety. So we'll talk about all that stuff.
Good, good. Going back with preparation, it makes me think of a Brian Tracy quote. He says, preparation is the mark of the professional. And
Mm.
I really think about that a lot. So as we're preparing for a recession, or maybe we're in a recession, I don't know, it just depends on which economist you're listening to. How can we prepare better?
Well, the first thing I would say is there are bearish strategies, there are bullish strategies, but most importantly, there are cash flow strategies. And that's really, really important. So let me start with a real estate example of just what it means. I mean, we have that metaphor of the tide going out and see who's naked. So and who's dressed, and that idea of margin of safety. So let me give you an example. let's say I have a single family. Well, I'll just use an example. Okay, let's take one of the single family homes I'll rent, and I could rent that, really, really hot in that I could charge a lot for rent. Well, that means when rents fall, I can't be dependent on that high rent. The other thing is I could refi it really hot. So let's say that, there's an average, the average home probably in my home state is, and this is an average home I'm referring to. This is, five, 600,000, something like that, just real average house. And if you have a lot of mortgage on that, let's say you got a $2,000 mortgage on it and your rent's 2,100, you're running that pretty hot. And the reason you might be doing that is you pulled money out. Maybe you bought it a lot of years ago and you're going to refi it, pull out a couple $100,000, tax free, which is awesome. And if you do, smart things with that money, great. But if all of a sudden rents fall, your fixed payment isn't going to change. And next thing you know, your renter leaves because the rents are getting lower elsewhere, right? I mean, recession makes things tough for people. And next thing you know, you can't find a renter to cover that payment. Okay, that's fine. If you were wise with your 200 grand, you pulled out tax free, maybe you can cover that for a while. But now you are at a negative cash flow. And as soon as you go from surplus to deficit, you're hurting. You're in a time crunch. And then if you have to sell that house, now it's a buyer's market, not a seller's market. And how do you sell that if you're underwater? If that home value drops below what you owe, now you're underwater. You can't get a rent in there. It's a deficit. Okay, now say you got 20 of those and you're running them all that hot. Okay, now you're naked, right? You got 20 different properties. You ran them all too hot. You pull out all this cash. Maybe you were wise with it. Maybe you weren't, but you still got those problems to deal with. So what we do is we say, look, we want those strategies. We want to use debt for sure. Debt is about utility. It's not good or bad. David Ramsey, I don't like picking fights with him, but I kind of like picking fights with him. It takes no creativity to wag your finger at people and say, don't spend money. That's discipline, not creativity and intelligence. I've never really seen him talk about wealth creation beyond real boring run-of-the-mill stuff. Go buy a mutual fund and wait. That doesn't take intelligence either. And so to create income is the big deal. When you create this, we love, the idea of refi. We love the idea of pulling stuff out tax-free. But if you pull too much and you run it too hot, you're not prepared for recession. Now, if you run it moderately and you run it wisely and you have a margin of safety, let's say you have some room where you could still rent it and you could still cash flow and be fine. Let's say the home price drops and you did decide to liquidate something. I wouldn't, unless you can 1031 it, but then you have staying power, if that makes sense. Now, in stocks, it's the same way. I think I'm going to do a podcast on ExxonMobil. And I said I love my Exxon. I think it's not the biggest holding that I have. I think it's probably fourth in what I have. But the reason I dumped so much money in that is when this talk about preparation, when oil was free, when they were paying you to take on oil, that thing hit probably low 30s, high 20s. I want to say, let's just call it $30. Let's say someone bought it 40. It doesn't matter that it's like 100 and probably 118 today, something like that. I haven't looked, but it doesn't matter that a guy, doubled or more than doubled money. 40 to 80's doubled, 80 to 120. I mean, that's a really nice gain. I would never sell that, and here's why. They've raised their dividend every year for 45 years in a row. Now think of what's happened in that 45 years. You've had 9/11, you've had dot-com bust, you've had subprime meltdown, you've had COVID. And you really can't, and you've had oil go negative. I mean, here's a gas company that is dealing with oil being not just free, but they have to pay people to get rid of it. And just think about that for a minute. and there they stand strong. I think they did 20,000 barrels more last quarter. I think their growth, I want to say their production in 2024 was up 13% production. And I think they did 7 billion in earnings last quarter. I don't quote me on these. I don't look every day. But here you have a behemoth and 80 we've since Al Gore put out an inconvenient truth, whether it's convenient or not, I don't know, but we've declined fossil fuels now from being 85% of the world's energy all the way down to 84. I mean, no difference. Third world countries are going to need more oil. So I sit here and kind of let me kind of the dividend is about $1 a quarter. So let's just call it's like 99 cents. So let's just call it $1. So if you were prepared and you bought at 40 during COVID, okay, you bought at 40 during COVID, and you now have a $1 dividend on the money you spent. So we'll call that cash at risk. Okay. So you put in your money, that's cash at risk. Okay. So that means in 10 years, you'll have your money back, right? $4 a year on a $40 price. Great. You can write a covered call, way conservative, way out of the money, give 50 cents on it a month. So there's another $6. So now you're making $10 a year on it without the stock price having to move. I mean, a stock price doesn't have to move. So, if you have a cash flow strategy, okay, they've been through recessions. Jimmy Carter's presidency was about energy crisis. It was terrible. And what they do, they raised their dividend every year for 45 years. So, I'd call that a moat. I'd say that's a pretty good moat that they do that. And so what do I care if Exxon drops back down to 80? What do I care? I'm still going to get, that's 20% in it by my math, 25%, $1 for the dividend. Let's say you write a covered call 50 cents a month. So that's $6 in premium on covered calls that you could do in an IRA. It's conservative. So $10 a year on a $40 investment is 20% on your money. Where does the recession come into that? A recession doesn't shut down the options market. All it does is make premiums go up because the VIX is higher. The dividend is pretty solid, and I guess they could pull that out. I guess they could stop that record of doing it. But you know what they did in the past? They did what Kenny McElroy does. They borrow money and pay their people. I mean, that's what Kenny does. He'll refi, borrow money, and pay his people. Well, that's what Exxon did. Same thing. When no one was buying oil, they just went out and borrowed money. They went and raised bonds and gave it to the investors, same as real estate guys do. And they said, "Oh, it'll bounce." Oil is not a luxury. Oil, food, clothing, shelter. Okay, you got companies with moats. Burlington Northern Santa Fe. 40% of cargo goes through rail. Burlington Northern has the biggest one. If you want food on your table, they do what? 20,000 tons of agriculture a year. So to put food on the table, food, clothing, shelter, to put walls around a home, to put food on the table, to take those clothes and ship everything, you got to buy oil. It's a necessity. It's got a moat around it. So that would be, in my estimation, something that, okay, there's a recession. If I'm still getting my dividend, who cares? And if I'm still writing my calls at whatever strike, who cares? That's kind of how I think about it, Dell. I would actually be excited for a recession, because if we get some prices lower, that's when I'm going to buy more. So people in a recession get excited because hopefully their cash flow isn't interrupted. Same with real estate. If I have a margin of safety in my real estate and I don't have to, if I can still rent a positive cash flow, I'm fine. And that's when you take the excess cash you have and you buy more. So I think that's what a prepared person looks like.
Mm. I love that. Let's do this. I'm excited to hear your excitement going forward here. So, but let's do this. Let's take a quick break. We just covered why most investors struggle in a recession and what not to do. But now let's shift gears. When we come back, Andy is going to walk us through specific strategies to recession-proof your portfolio. And remember, if you want to make smarter financial moves in any market, go to stockcastbonus.com right now and grab your free investing resources. That's stockcastbonus.com. Check it out. Stick around. We'll be right back.
So far, it's been great. I needed a source where I could really enrich my education through stocks. I didn't really have an avenue for it, and it's helped me a lot. The simplicity has really gotten me on the track to where I enjoy the learning as well as it's really solidifying in my mind. And like, they're not just trying to sell you something, they really care about the people that are in the course, and they really do care about you and your personal goals, and what you want to do is to help you and your family and whatever your goals are in life through that. So it's really been great.
Welcome back to Rich Dad Stockcast. I'm your host, Denney, and today we're talking about how to recession-proof your investments with none other than Andy Tanner. Now, Andy, let's talk strategy. What should people actually be doing right now to protect and grow their wealth during these times right now?
Well, that's a loaded question because you know what I'm going to say to that. It's what I always say because it's always true. Look, I'm an education advocate. The smartest thing you can do if you're not smart is get smart. The worst thing you can have in a recession is to be without intelligence. I mean, mic drop. I mean, look. The mission is really clear. Is to elevate the financial well-being of humanity, right? And that doesn't happen in ignorance. It's that simple. It just doesn't. And I had a wonderful lady. I had a friend text me. And he said, "Hey, I have this friend and she's having problems and she'd like to reach out to you, but I don't want to give your number out without your permission." I said, "Give her my number. If someone wants to learn, great." And she goes, we talked for about 45 minutes. And the first thing I said is, you have a decision to make, be educated or not. There's no halfway. You either study or you don't. And so I talked to her for like 45 minutes. And at the end, she goes, "Is there any way is there like a middle of the road on this? Where I could just learn enough." And I'm like, why are you resisting learning? Why do you want to be mediocre? I mean, why would someone set a goal to say, I want to be mediocre smart? And I didn't invite her into my academy because I could tell when someone says, "Can I go halfway?" Like go to Yale and say, "I'd like to be in Yale." But is there like a happy medium on the study here? I mean, geez, man, like crazy. So I said, "Hey, why don't you go do this one over here?" I pointed a different one. She goes, "Well, I do have their newsletter." I said, "Oh my gosh, do you get an economics degree on a newsletter?" So people fight education because what they did is they went to school where it was no fun. But anyway, don't get me going on education. So two things in preparation, one thing in action. So the first preparation is, what have you done asset wise, to weather a storm? The second thing is, what have you done education wise to weather a storm? Now, my brother is a homicide detective, so he investigates murder. And before that, he was a police officer who had a beat, he patrol officer. And in his training from the education, he would spend a lot of rounds. I mean, he spent a lot of bullets, man, and a lot of time in the gun range, and a lot of time in what we would call tactical, like SWAT, special weapons and tactics. And the SWAT team trains and trains and trains and trains and trains all the time, training all the time for that one moment where they're in a firefight. So I asked my brother, I saw him. There was a guy shooting police officers, in his jurisdiction. This guy's out there. He's an active shooter. He's got an AR-15. He's taking down police officers. And I look on the web at the news channel on the web. There's a picture of my brother in his body armor with his AR hunting for this guy. I'm like, I call him. I says, "What are you doing?" I saw him out there in the riots of, with his shield, fighting. And I'm like, how do you handle when someone's shooting at you? And he said, we've trained for it. We're prepared. So you can be prepared asset wise with cash flow strategies, but you also want to be prepared tactic wise. So you know, I'm not going to turn this into an I told you so, but I guess I am. Last July, my team and I are talking, and we're seeing signs, and we're seeing stuff, and we're like, what are we doing to prepare to profit on the downside? Not just maintain, but to profit. And we were sharing all the ideas with each other. What are you doing? What am I doing? What are you doing? We were getting ready. And I thought, man, we should share this. And people say, oh, you just pitch your class. Well, that's fine. No one has to get it, but I have the right to say, hey, I can help you. If they don't want my help, fine. They can do what they want. But we put together our version of SWAT, which we call armor, like body armor, defense. And armor is an acronym. It stands for Advanced Risk Management Opportunity Readiness. It's a preparation class. And it's all the fancy stuff we do to explode wealth when things fall apart. So you have your cash flow strategies, which they should be rather robust, market up or down, right? Your rents, people still have to pay rent. They still have to. It might be less rent, but they still got to pay it. So you have these variables, but if you have your margin of safety, you can maintain a cash flow. Costco on a Saturday in a recession gets less people in the door, but they're still coming to the door, and the cash flows one way into the register. It doesn't change. Recession doesn't change the cash flow pattern. Owning assets, the producers still produce, the consumers consume. It's just less, but the cash flow patterns don't change. They just are less, and that's fine. If you've broadened your base and all that. So we have this class called Armor, and most people, if they took it now, if you're brand new and you try to take that class, it'd be worth taking just to know what you don't know. It'd be worth a newbie taking it just to say, oh my gosh, at least I now know what to study, because most people would be in that class saying, what? So, how do you prepare people that, we're always grateful for anyone that'll, listen to a podcast or whatever. We love the opportunity to have an audience. There is a time where you go from podcast watcher to student, and you study outside of just watching things. I mean, you really start to learn the deep stuff. And so, learning how to hedge and how to make money and how to batten down hatches. Hedging, there's a fancy term called delta neutral. And you can get delta neutral really quick and just kick your feet up and preserve all your wealth, neutralize your portfolio, and kick your feet up and wait for the dust to settle. You could certainly do that. And just let your stock. Why would I want to sell stocks and pay capital gains, lose my dividend, and not be able to write calls anymore? Why would I sell all that stuff? I'd lose my income. Does Warren Buffett sell Fruit Loom underwear? Does he sell Dairy Queen? Does he sell See's Candies, Geico, Duracell batteries because there's a recession? None of those businesses are for sale. They don't have stock prices on them. He owns them free and clear. The only way you can buy them is to buy Berkshire, and then you own them because he does. So we're not going to sell. Is Costco going to shut their doors because of the recession? No, we're going to keep producing. So yeah, you delta hedge. You kick your feet up and you delta hedge things to lock in net worth, and that saves net worth and preserves cash flow. And that's what hedging does. It lets the cash flow keep going, and it preserves the net worth, and the cash flow is more important anyway. So you can do that. Now, if you really want to get exciting, you can learn bearish strategies, and you can learn how to make money when things go down. I think stocks are one of the best places to do that because they're absolutely agile, they're scalable, they're liquid. Those three things lend themselves to be able to make a little on the downside. if you want. And we enjoy those opportunities for sure. I mean, I'm more excited about buying once they go down. I'm more excited about buying. And people say, well, how do you know where the bottom is? Well, it's not that tough. You don't do it technically. You don't do it as a technical analyst. All the technical analysts are always, oh, there's a double bottom. Oh, here's a doji at the bottom and some confirmation. That's the bottom. That's not how you do a bottom. You do a bottom fundamentally where you look at a book value, the actual assets on the company's, financial statement, and you say, golly, if I pay $1 here, how much book value do I get? And then you look at their moat, and you say, you know what, that's a good bargain at that price. And if it goes lower, so what? Let's say you buy, we use Exxon again. You buy Exxon when it hits 40 and it goes to 30 and then up to 120. Okay, you didn't get 30, you got 4, but you're getting a great deal. And in real estate, you don't have to pick the bottom. You just have to look at it and say, okay, this is a good deal now. This is low enough now. It's a good deal. And Warren Buffett, in his Berkshire Hathaway letter in 2021, everyone should go read that. It's for free. He said, the most important number is operational cash or operational earnings. Operational earnings basically tells you what they produce and if people like it, right? We're making money, and we have economics of scale that allow us to make money and serve the customer. So if you have operational earnings, that's a big one. He says, we try to get companies with operational earnings. He says, we have some good ones, some moderate ones, and some marginal ones, just like I do, like every investor does. You have your big performers and your light performers, and your non-performers you cut. And he said something I thought was amazing. He said, the reason we love our common stock segment, meaning marketable securities that go up and down with emotions. He said, the reason we love the marketable arena rather than just the See's candy and the Dairy Queen, the Duracell and the RC Willie that we keep with no price on them. The ones that have prices, when people lose their freaking mind and they start selling, it feeds on itself. And I will just tell you, there are millions of people that sell by staring at a price going down and saying, I better sell before they're so locked in on the price going down, I better sell, they're forgetting they have a great company behind it. And that pendulum swings, and that detachment right now is detached to the upside. They're overvalued, but they can go down and be undervalued. And man, that's when a guy like Buffett with $300 billion in cash on the side is going to pounce, and he'll buy that. I mean, he's already equivalent to owning, I think he's equivalent to owning 5% of the S&P. I mean, it's incredible, and he will pounce. So that's how you look at a recession. It's an opportunity if you have, weapons and tactics. If you've done your training, the armor training that we built. So we did this event in July, and I said, let's record it. And anyone that wants to purchase that class can watch the recording. It's 5 days or 4 days. And we do 4 days, each day of the stuff you would only use in a firefight. The run-of-the-mill stuff we teach every day, how to get cash flow. That's run-of-the-mill. I'm talking about the firefight. I'm talking about that, once every 7-year, 8-year black swan that just crushes, and how do you exploit that? And so that's how you prepare for a recession. You have your assets in order with a margin of safety, a moat, your cash flow base, so the cash flow continues. Might be less, but you're fine. And then you get the tactics to exploit, hedge, protect, take advantage of, and that's education. And that's what it is. A wealth plan, for someone who's new, a wealth plan is an education plan. It's the same thing. So there you go. You put a nickel in me, you ask one question. I think you got 2 questions in the whole podcast, but obviously I feel strongly. So your job was easy today.
It really has. I feel like I've got my money's worth with those 2 nickels that I put in. One last thing I want to talk about, and that's just mindset. Thinking about 2008, That's when I really saw emotion come into play, right? Emotion, when emotion is high, intelligence is low. There's even more emotion today. You turn on the news, that's what they're paid for, is to stir up emotion. You made a great mindset quote earlier, and I absolutely loved it. And it was, I got my team together. I thought, how do we not just protect our money, but how do we make money? What a shift that is. Like, most people are scared trying to protect, but you're thinking, how do I actually grow my wealth? So, Andy, my question really is to you is, what's some other ways we can protect our mindset? How can we keep emotion low so our intelligence, which you talked about earlier, remains high?
Well, there certainly is the emotion. There's no question. The VIX is the fear gauge. But to tell you the truth, it wasn't just selling off emotion. It was it was margin call time. It was like forced, like some people sell when you in a pawn shop, that's not emotion. That's have to.
Hmm.
You have to. And so when you're forced into a position where you have to sell, that's your worst nightmare, right? Because that's not anything to do with emotion. That's you're getting, bank's
Survival.
gonna bank's gonna foreclose on the house, and if you don't sell it, you're gonna lose it and get nothing, right? I mean, that's big time. As far as I mentioned hedging. I don't know how granular you want to get. Buy a call spread on the VIX. That's a very specific example. The VIX, if the VIX goes up, like let's say the S&P falls 5%, VIX could go up 200. It's a leveraged. It's like your insurance on your house. You pay this small premium, but if the thing burns down, you're in California, your house burns down, an insurance got pretty freaking valuable, right?
Mhm.
It's levered. And so how do you protect stuff? You find leveraged instruments that don't cost much, and you buy insurance. So let's say you buy a call spread on the VIX, where you have a long at the lower, and you're not going to have infinite VIX, so you sell one at the higher, and now you've got a nice upside if the VIX explodes, right? And it doesn't last long. It's a spike. So you have two levers. You have double leverage there. You have one is the very nature of the VIX is a multiple of the S&P. If the S&P moves 5, the VIX might move 100. And then if you have more leverage by having an option on it, now you have even more leverage by contract with no debt. And so, we put those trades on. We did it. We had our annual event, our labs. We do a month-long annual event for our best students. It's a month long. We do it in March. So we just finished it. And we actually did that exact trade, and it just crushed and we showed them that. We said, look, this is how you literally, we were doing it for the reason we're talking today, is to show them what it looked like. And we did it in real time so they could see it. The ability to buy a put and the ability to do what's called beta weighting. I talked about hedging. I mean, maybe this is too granular. I don't like the jargon, the detail. I like the big picture, but you can get a nominal, or you could just beta weight against the S&P 500 at your portfolio, and you say, gee, what put options do I want to buy to get delta neutral right there? And you will be delta neutral. And you can actually do the math on it, and you can get there. So you can use futures, which is very aggressive. I mean, that's 50 to 1, right? Dow moves, or S&P moves a point, it's $50. So however many contracts, 2 contracts is $100. 3 contracts, 150. So you can use those as highly levered. Now, those are dangerous instruments, and those you would really need to know what you were doing before you did that. But for those that do, look, the two biggest, back when they used to open outcry in the SIBO before it was all computerized, the two biggest pits are the VIX and the S&P. Why? Why are those option pits? Because they're for protection. And that's where the big boys go to get protection. So if it's good enough for them, it's good enough for me. So I don't know if that's too granular, but learn those things. But if you don't even know what an option is, and you don't know what deltas are, and you don't know what beta weighting is, and you don't know what a nominal value is, and you don't know those details, and knowing them isn't even enough. I have this thing called the education continuum. There's people that are book smart, right? There's people getting A on the test. Oh yeah, I know what an option is. Okay, are you proficient to where you can use them though? I've coached a lot of basketball. I've played a lot of basketball. It's a lot harder to play. It's easy to sit there and, hey, do this, hey, do that, because you don't have to perform and do anything. You sit there and you tell, it's like you're coaching golf. Hey, hit the ball straight.
Easier
Hey,
said than done.
you know how you sliced it over here. See, don't hit it straight over here. See, I mean, coaching's easy, right? Oh yeah, you hit it over this way, hit it straight, and this time hit a little further. Oh, on that putt, just a little softer. It's easy to coach, right? But we want to be able to do it, and so that's it. So look, if a person is nervous, start learning. We just said we have free resources that are a first step to learning, but you might feel a little urgency to catch up and say, the question isn't saying what should I do, Del, to say, hey, what should people do to prepare for a recession? No, who should you become to prepare for a recession? Who do you want to be in that moment? I don't want to be in that firefight because I'm not a SWAT. I'm not trained for SWAT. So if you say, hey, Andy, you're going to be in a firefight and they're going to call in the SWAT team, you're going to be there. I'm saying, no, I haven't become a SWAT team member. That's not who I am. So, preparing for a recession is like, who are you? Who are you? And it's really who you are, more than what to do. I think to prepare, which is why I'm an education advocate. Personal development boils down to two things. What do you want to learn? And what are your habits? Bringing your behavior in line with what you've learned. That's it. What have you learned? And is your behavior in line with what you've learned? Do you act the way you know you should act? And do you know how to act? Well, that's becoming. And a person that does that has become an investor if they know what to do and they can do it. So it's a personal development issue. It really is. It's not it's not an easy thing. There's a lot of mistakes that are made and a lot of grind that goes into that. But I'm excited for the recession if we get a nice big one. And I love all the tariff stuff that's stirring things up. And I love the spikes in the VIX because all it does is make the premiums higher. If you want to sell some options, it's a beautiful thing because the calls go up just like the puts do, not quite as much, but they both go up with the VIX and the fear, and it's good time to be alive, man. It's a good time.
That is absolutely amazing. And with that, let's wrap up today's episode of Rich Dad Stockcast. Recessions don't have to mean financial destruction. They can be one of the greatest wealth building opportunities of your lifetime if you're prepared. And a huge thank you to Andy Tanner for sharing these powerful insights. If you take one thing from this episode, it's this: don't wait for certainty. Build a strategy that works no matter what the market is doing. Be prepared. And don't forget, grab your free investing resources at stockcastbonus.com to recession-proof your portfolio today. That's stockcastbonus.com. If this episode gave you value, do me a favor, like, subscribe, share it with someone who needs to hear it. Let's help more people invest smarter. Thanks for tuning in to Rich Dad Stockcast. I'm Del Denney, and I'll see you on the next episode. Stay smart, stay invested, and take control of your financial future.
This podcast is a presentation of Rich Dad Media Network.